Welcome to G Fun Facts Online. In cities and villages across India, a revolution has taken place. It's not loud or chaotic. It's the sound of a quiet beep from a smartphone, the flash of a square, pixelated code. This is the story of UPI, or the Unified Payments Interface. Launched in 2016, this real-time payment system has become the financial backbone for over 1 billion people, processing transactions worth trillions of dollars. It's a global marvel of digital infrastructure. But this incredible success story is a double-edged sword. For every tale of convenience and empowerment, there's a story of vulnerability, fraud, and exclusion. Today, we're dissecting the meteoric rise of UPI, celebrating its triumphs, and critically examining the intricate challenges that lie in its shadow. So what exactly is this system that has so completely transformed a nation? At its core, UPI is a work of genius in its simplicity. It's a system that links multiple bank accounts into a single mobile app. It allows you to send or receive money instantly, 24/7, just by using a simple, unique identifier called a virtual payment address, or VPA. Think of it like an email address for your money, something like your name at bank. No more fumbling for account numbers, IFSC codes, or complex passwords for every single transaction. You can send money using just a phone number, or, most famously, by scanning a QR code. This simplicity is what has made digital payments explode in popularity, reaching every corner of Indian society. Behind this simple interface is a powerful and scalable technical architecture built by the National Payments Corporation of India, or NPCI. The NPCI is a not-for-profit organization guided by India's central bank, the RBI. It built UPI on top of an existing system called IMPS, designing it to handle millions of transactions at the same time without breaking a sweat. The ecosystem involves your bank, the app you use, like Google Pay, PhonePe, or Paytm, and the NPCI acting as the central switchboard, ensuring every payment is routed safely and securely. This well-oiled machine has been the engine of a massive transformation. One of UPI's greatest achievements is its impact on financial inclusion. For a country where a huge part of the population was previously unbanked, UPI provided a low-cost, easy-to-use gateway into the formal economy. It has democratized finance. Take the story of Rajunath, a street food vendor. Before UPI, he dealt only in cash, often struggling with getting exact change for small purchases. After adopting a simple QR code, his sales skyrocketed. Customers no longer limited their purchases to the cash they had on hand. Or consider Pungavana Mama, another street vendor, who found immense relief in not having to manage a pile of small notes and coins at the end of a long day. These stories are repeated millions of times across India, showing how UPI has leveled the playing field for the smallest of businesses. This revolution has been particularly powerful for women. The UPI for Her initiative is specifically targeting women micro-entrepreneurs, a group of nearly 200 million people. By giving women direct digital access to their finances, UPI has increased their financial independence and decision-making power within their families and communities. The economic impact is staggering. By reducing the reliance on cash, UPI has made the economy more transparent, helping to curb the circulation of untaxed money and boosting tax revenues. The government saves money on printing and securing physical currency. And the vast amount of transaction data has fueled a boom in the fintech sector, creating new financial products and new jobs. Research has even shown a strong link between the growth in UPI transaction volume and the growth of India's GDP. For businesses, large and small, UPI means better cash flow. Payments are instant. There are no more delays waiting for checks to clear or reconciling cash deposits. This has been a lifeline for small and medium-sized enterprises, reducing their dependence on informal, high-interest loans. But as we said, this is a story of a double-edged sword. The very features that make UPI so convenient have been weaponized by scammers, creating a new and dangerous landscape of financial fraud. The rise of UPI has been shadowed by a surge in sophisticated scams. Let's break down some of the most common ones. First, there's classic phishing. Scammers send fake messages or make calls, pretending to be from your bank or a UPI app. They create a sense of urgency and trick you into revealing your secret UPI PIN or a one-time password. Remember, your UPI PIN is like an ATM PIN. You only ever enter it to send money, never to receive it. Another common trick involves malicious QR codes. A scammer will send you a QR code, claiming it's for you to receive a payment. But when you scan it and enter your PIN, you are actually authorizing a payment from your account to theirs. A particularly nasty variant is the collect request scam. On UPI apps, you can send a request for money. Fraudsters send these requests disguised as refunds, lottery winnings, or cashback offers. An unsuspecting user sees a pop-up that says pay, clicks it, enters their PIN, and their money is gone. Then there's SIM swap fraud, where a criminal convinces your mobile provider to issue a duplicate SIM card for your number, giving them access to all your OTPs and control over your accounts. The statistics are genuinely alarming. Since the 2022 fiscal year, there have been 2.7 million reported cases of UPI-related fraud, with a cumulative loss of over 145 crore rupees, or about $250 million US. In the last financial year alone, over 1.3 million fraud cases were reported. These aren't just numbers, they represent real people losing their hard-earned money. Consider the 24-year-old manager who lost 50,000 rupees while trying to sell his air conditioner online. The buyer, a scammer, guided him through a series of steps, making him believe he was setting up his account to receive the payment. He was tricked into entering his UPI PIN multiple times, draining his account with each entry. Or the woman who lost 55,000 rupees after a con man, posing as someone sent by her father, tricked her into clicking a link to receive money. The emotional toll is immense, leaving victims with feelings of shame, guilt, and a shattered trust in the digital world. Beyond individual fraud, UPI's success has highlighted deeper, systemic challenges. While praised for inclusion, it has also risked widening the digital divide. The entire system depends on having a smartphone and a stable internet connection, luxuries not universally available, especially in remote rural areas. Studies have shown that while younger, more educated people in these areas use UPI, transaction failures and delays due to poor network are constant frustrations. Many older residents, or those with lower digital literacy, remain hesitant, fearing they'll make a mistake or fall prey to fraud. Even when women in rural areas have a smartphone, they often rely on male family members to help with transactions, which undermines the goal of true financial independence. This points to a critical need for widespread digital literacy campaigns. Another major issue is market concentration. The UPI ecosystem is dominated by just two players, Walmart-owned PhonePe and Google Pay. Together, they control over 85% of the entire market. This creates a massive systemic risk. A technical glitch or outage at either of these companies could paralyze a huge portion of India's digital payment system, with potentially catastrophic consequences for the economy. The dominance of foreign-owned companies also raises valid concerns about data sovereignty. Who ultimately controls the sensitive financial data of hundreds of millions of Indians? To counter this, the NPCI proposed a 30% market share cap for any single app, but the deadline to implement this has been repeatedly pushed back. And this leads to perhaps the most contentious debate surrounding UPI, the problem of zero MDR. MDR, or merchant discount rate, is the small fee merchants typically pay to a payment provider every time a customer uses a card. It's how companies like Visa, MasterCard, and banks cover the cost of running their networks and make a profit. In India, the government mandated a zero MDR policy for UPI. This means merchants pay nothing to accept UPI payments. This was a masterstroke for driving adoption. It made UPI free for everyone. But it creates a sustainability crisis. The banks and payment apps that run the UPI infrastructure still have massive costs, but they have no revenue stream from the transactions themselves. While the government provides some subsidies, the industry argues it's not enough. This raises a critical question. If no one is making money, what's the incentive to keep investing in innovation, security, and infrastructure? There is a growing call to introduce a reasonable MDR to ensure the long-term health of the ecosystem, but it remains a political hot potato. So, with all these challenges, what does the future hold for UPI? The journey is far from over. First, UPI is going global. India has already signed agreements with countries like France, Singapore, the UAE, and Mauritius to enable UPI payments. The ambitious plan is to expand UPI to 20 countries by 2029, making cross-border payments cheaper and more seamless for tourists, students, and workers sending money home. Second, the technology itself is evolving. We are seeing the pilot programs for India's own central bank digital currency, the e-rupee, which could one day integrate with UPI. Artificial intelligence is being used to create more powerful fraud detection systems and personalized financial services. Soon, you might be making payments with voice commands, or your connected car might pay for its own fuel. Biometric authentication using facial recognition or fingerprints is also set to become more widespread, offering greater security than a PIN. Finally, the regulatory landscape is continuously adapting. The RBI and NPCI are working to strengthen security, improve customer grievance redressal, and ensure a level playing field. The challenge is to strike that delicate balance, to encourage innovation while ensuring the entire system remains stable, secure, and sustainable. In conclusion, the story of UPI is a powerful narrative of what a country can achieve with bold technological vision. It has been an undeniable force for good, empowering millions and fueling economic growth. But it's vital to see the whole picture. The technology that brought convenience also brought new risks. The digital divide is real, market concentration is a threat, and the question of financial sustainability looms large. The journey of UPI is a work in progress. To secure its future, India must tackle these challenges head-on through stronger security, widespread digital literacy, and a regulatory framework that fosters both competition and consumer protection. The double-edged sword of UPI is a lesson for any nation undergoing rapid technological change. That quiet beep of a UPI transaction is indeed the sound of progress, but it must also be a constant reminder of the vigilance and responsibility that must accompany it. Thank you for tuning in to G Fun Facts Online.